Okay. What about now, guys? Is it any? Is the sound any better? So, no sound. Okay, I keep having comments regarding the sound. Okay. 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 So, oh, it's gone now. So no, it's off again. Okay, I can see your comments. I can see your comments. I will need 5 minutes time. I will need 5 minutes until I fix this thing. I can see. Okay. It's on now, Daniel. So I don't know whether there are, for some of you don't have sound, some of you have sound. I'm not sure whether it's from my side or your side, guys, but okay. So it's on now. Okay, I will not change anything since you can hear me. Okay, I really appreciate your feedback. It's okay now. Okay, so I won't change a thing since I don't know what's wrong, but now it seems that it has been fixed. So okay, sorry for the technical issue. I will go through the briefing once again, even though the data are already out. The data are already out. So I will actually make a quick briefing of what happened so far today, and then we can go together to check the calendar and check what happened with the data. You can hear me now. Perfect. Sorry for that, guys. I don't know. It's something wrong with the microphone. So since it's okay now, okay, let's have a quick briefing. As I was saying, let me just bring my. Okay, so the data are already out, but let me quickly make a quick briefing of what happened so far today. I will repeat what I said when the sound was off. So I was saying that today we've seen stock markets actually initially bearing some losses, then started to erase some losses and then faded again. So what happened actually? It was initially the fact that we had a record new cases reported from Florida, California, and other United States, and also was a big hit by the largest spike of new COVID cases for Australia. So this is something that weighted significantly overnight in the stock markets and in the whole market as well. So once again, we are seeing that the first thing that affects the markets quite significantly, and the thing that we should really focus on, it will be still the virus, still the pandemic. So we've seen that the sentiment is like changing, lifting, or declining, like reversing all the time due to the virus. So it's the first thing that weighs on the sentiment, along, of course, with the warnings, the growth warnings regarding virus. So virus jitters and growth warnings continue to weigh on sentiment. This will remain the case until for the weeks ahead. So it's not like something short term. So where are we standing right now? I was saying that we've seen stock markets having bared some gains because the sentiment remains cautious, but Actually, initially, in the Asia session, the markets had started like lower. However, from the announcement from ECB regarding new liquidity, so there was an announcement earlier regarding new liquidity providing facility for non-European, non-Eurozone central banks, is something that helped the sentiment to be lifted, and is something that actually helped temporarily at least DAX, FTSE, in general the European stocks. So DAX was actually eased on the European opening some losses, and that, however, the impact of that announcement was quickly started to fade. So just to summarize a bit, that DAX has actually trimmed some gains to 0.31% for the time being. FTSE, however, is down. It's lower. US futures are also lower. Dow Jones has actually posted a loss of 0.43%, and at this point I will also say that I found interesting the fact that the UK 5-year yield, the called gilt, also posted a record low today and a record decline at 0.40%. So you can understand that there is a correlation between yields and stocks and pounds. So we should really keep an eye on the yield curves as well, and the yields, in order to identify the potential performance of UK stocks, pounds, and all the related assets. So virus still weighs on the sentiment. The only positive data that we've seen so far was the announcement from ECB, so that will help a bit the euro sentiment. On the flip side, we have also seen the trade tension between US and Europe this time. So not the US and China, not the China and Australia, not China and New Zealand, but now US and EU trade tension is back in focus. So we've seen actually reports since yesterday from US stating it was a proposal, actually, more precisely, for tariffs on European goods such as beer and gin. So that was quite interesting. That's something that brings back to the attention another trade relationship, other, of course, than all the rest that I already mentioned. So yeah, that's something that weighed on the stocks initially as well, on the European stocks most precisely, and the US stocks. But as a reminder, I will say that you need to know that EU and US are still in the middle of a dispute over airline subsidies, and that has the potential to escalate. So we might see news on that side, which actually could weigh once again on the sentiment of the market. So let's see where we're standing. I'm not sure whether I forgot something with that audio sound on and off for the time. I confused myself. Sorry for that. So what else? What else I wanted to state? Let me double check my bullet points. Okay, yes, the consumer confidence. Sorry. So we had two announcements, two releases today. Consumer confidence from GfK in Germany and the CIB consumer sentiment in the United States, both coming better than expected. So they have actually helped a bit. So that's why we have seen FTSE marginally lower, but improving with the help of the data earlier today in the European session. But as I said, the US proposal for tariffs and the virus, the second wave, the warnings for further growth in the new COVID cases are actually dominate the market and are driving the market at that very moment. So let's have a look on the markets, and let me know whether you want me to cover any specific asset. Okay, guys? I will really appreciate your feedback, and just let me know what you want me to cover today. So we're gonna go through the platform right now. Okay, so before we do that, let me share the economic calendar. Our economic calendar, and let's see together the data from United States. So we had durable goods, jobless claims, gross domestic product for the first quarter, and the personal consumption index for the first quarter for the United States at the same time. They're all together. They're all out. Something that I missed also is the fact that China is on holidays, so you understand that the volume has been declined. So. And that is something that explains also the fact that Asia equities are actually, other than all the rest that we have already said, that they have closed in red. So China is off, Nikkei off to 1.2% decline. And let's go back to the calendar. Let me share it with you. So I would like to share the Hot Forex economic calendar. Let's see together the release. So set up okay, so I don't need my caption to be shown anymore. So here we have the data of the day. So jobless claims came at 19.5 million, so actually lower than expected, lower than last month. Also, even though, so that's is a positive outcome, but and a bit of a mix as well, because last week's reading was revised higher instead of lower. And let me also prepare my chart with dollar index. So jobless claim came lower than expected. That's a good sign, because this means that we have a downwards trajectory in regards to the jobless claim. So slowly with some baby steps, we can see that the jobless claims are detecting, and that's a good news for the labor sector in the United States. At the meantime, gross domestic product for the first quarter was actually confirmed at 1.6%, so unchanged from the fourth quarter of 2019, better than expected. So growth still on in the United States, even though that doesn't necessarily mean that we're gonna see we have a recovery in the United States. Nonetheless, this is for the first quarter. So January, February, March. Remember, the nadir of recession and the nadir of the pandemic, and the how can I say that, the nadir of us seeing an impact, negative impact from a pandemic into the economy, into the global economy, was April. So after April was a nadir. So this reading in regards to the first quarter, so January, February, March. So that doesn't really necessarily mean that we are hitting into a recession, recovery yet. 1.6 for the GDP, gross domestic product for US in the first quarter. The annualized number remained unchanged. Personal consumption expenditure prices 1.3 unchanged as well for the first quarter. The core one, however, has inclined to 1.7% from 1.6% expected. And durable goods. So a significant rally for durable goods in May. So this is, in my humble opinion, what we should emphasize on, because it's for May, it's not for the first quarter or something. It's on the past data, it's just last month's data. And from the 8.2% dropped, we have seen suddenly a boost up to 4%. So that's, if I'm not mistaken, let me just double check, but if I'm not mistaken, the negative 0.2% that we have seen in April was a record low for durable goods. So the fact that we have exceeded that record low, and we're seeing a boost to the upside and a positive reading, suggests that things are improving. So remember, remember, always try to click on the data in order to see what each particular data means. So what is durable goods? Simply is the cost of orders received by manufacturers for durable goods. So it means the goods that plan to last for 3 years or more, excluding the transport sector. So it's actually shown. It shows the investment on those particular goods. So that's why any good reading, it will be bullish for dollar. Any bad reading will be bearish for dollar. So let's have a look whether dollar was actually affected by this overall mix, not mix, actually good, positive US session, US data. So let me share MT4 with you. Okay, I can see that you have a lot of questions. Okay, let me start with dollar index, and then I will move to gold according to Kinsam, and dollar yen according to Ofori. Dollar yen is still on the uptrend, Bancola is saying, and gold. Okay, so let's stop sharing. Let me share my MT4, and here we have. So sorry for that. So okay, I assume that you can see my screen. So this is the dollar index. So as I was saying earlier, we have seen that dollar index was firmer due to the risk aversion. So is the news providing really the reality about the pandemic era, so that helped the demand for dollar, not because we had some good news or something, but because remember that dollar is a safe, it's considered to be a safe asset, so a safe haven asset. So we have seen pretty much a safety demand on dollar since yesterday. So the record numbers that we have seen from California and Arizona, along and other cases, other U.S. states, along with the return back to the U.S. and EU trade tension, that actually boosted dollar higher, and actually dollar has been lifted amid a backdrop also on the wobbling stock markets. So correlated with stock markets, so a decline in stock markets boosted dollar higher, along with, as I said, the risk aversion. This is what we have faced so far today. So if you excuse me. So a nice rally on the dollar index in the short term. Spiking higher away from Monday's lows, down to 96. Let me have an arrow over here. 96.30. Rally to the upside. Edge out to 3 days highs, if I'm not mistaken. Let me double check. 1, 2, nearly 3 days highs. So up to 97.50. Real support could be really found at Monday's, that should be, yes, Monday's high in the 97.70 territory, which should be, yep, over here. Friday's high is 97.68 more precisely, so it's really close to 3 days highs. 97.50 was already heated. Okay, so we've seen that the dollar demand is still on. So the data, because as I said, it was pretty much a good data, growth for the first quarter in the United States, better than expected durable goods for May, suggesting that we are off the record lows that we have seen last month, something that boosted the dollar even further and helped this safety demand for dollar. So and don't forget that dollar index is correlated, and dollar is correlated with the wobbling of stock markets. So something where is it? Let me just double check. So Okay, dollar index, or this is the 5 and 9 exponential moving average in this 1 hour chart, this blue and red line. So you can see that they both moving higher. They are moving a line higher, more precisely. Momentum indicators are still positively configured, even though stochastics over here has crossed into the overbought territory, but it doesn't look too ready to turn lower or something. It's still pointing upwards, so that means that we might see further steam to the upside. It's a bit in contrast though with RSI that it slept lower but didn't cross yet the 70 barrier. So overall, the sentiment looks to be positive still, despite this short-term decline. The last, let me go down to the 30 minutes chart, so the last 30 minutes or so. So yeah, but definitely sustains a move above 97, above 97.35, which was the fractal over here, the latest fractal that we have seen today in this 1 hour chart. So that could be the immediate support level for intraday, for the intraday picture of dollar index. So positive intraday. Let's have a look on the daily chart. Okay, so daily chart rebounded crossed above 20-day moving average, still below the 200 moving average. So a lot of strong resistance on the 98.20, 98 territory. So which hasn't been really triggered for more than a month. So nearly a month now. So that's to the upside. If it continues to the upside, we could see retesting a 98. But that's a very strong resistance level, so it could be easily reversed lower at that point, similar to what happened last week. So however, as I said, it crossed and closed yesterday above 20-day moving average. Stochastics turn bullish cross has been posted over here. RSI remains below 50 though, so that should suggest that we are really much in a neutral to negative overall outlook in the daily chart, at least. Intraday, as I stated, it remains to the upside, so let's wait and see. Okay, let's check. You mentioned about euro dollar, you mentioned about dollar yen and gold. Let me start with euro dollar and the question from Mr. Kemphy. So I will shift to euro dollar because we had an announcement about new liquidity, so that's why I want to turn a bit on euro dollar. So we have seen clearly euro suffering due to dollar safe demand. So dollar is getting stronger against euro despite the announcement from ECB. So it didn't really help the proposal of 750 billion euros as a multi-annual financial framework didn't really help euro. So euro against dollar, of course. Sorry. So even though that's our intraday picture, okay, the short-term time frame. In the long-term picture, euro remains on the high territory, and the high territory seen for the whole year. So there are a lot of analysts from abroad and worldwide that they keep saying that there is still this is a positive step, and that could help in the long term, in the next few weeks, few months, the euro to continue getting stronger against dollar. But let's not forget that we have that trade tension back into focus. But the EU's proposal for 750 billion 50 million financial framework could be a factor of bullish euro. This is something that Morgan Stanley actually stated as well, along with Citi. So both big publishing houses, big banks, actually state that this is a significant factor for a potential bullish sentiment for euro. Something that I forgot to mention earlier. So more precisely, Morgan Stanley actually argued that the EU proposal means that that some of the risk premium of EU's breakup risk will abate, and that actually and the creation of a new large and liquid AAA asset, high yield AAA assets could eventually attract more inflows from real money investors and reverse managers. So according to Morgan Stanley and Citi, they keep forecasting for euro dollar a potential spike up to 1.20 level for the second quarter next year, though. So this is a long-term view from Morgan Stanley and Citi. So that was something that I found interesting and I wanted to share with you. But let's focus on the short-term time frame. Of course, there are a lot of risks that could actually affect euro, and there is a lot of way until we are back to economic normality. So yeah, still there are a lot of risks to the downside, not only for euro or a dollar, but in general for the market. So but let's actually focus on the short term. So daily turned lower for a second day in a row, retesting 112 territory. Next level to the downside to be seen in the daily picture is last week's low in the 111.70 territory. So we have that daily fractal over here, daily lower fractal at 111.70. So that's the next level to be watched in case that euro dollar continues moving lower. And let me get rid of the Fibonacci so it will be clear to you what we are actually seeing. Okay, so if I put some Fibonacci from the bottom that we've seen in May up to the top that we've seen in June, right now the asset has reversed nearly 35% of the gains that we have seen in May. So that's not a significant loss, because remember the 23.6 Fibonacci level is not a strong retracement level. But if it hits and breaks the 38.2 Fibonacci level, then that could be something that we could really turn our attention on, because that will mean that the overall outlook, the medium-term outlook, the daily outlook, and the weekly outlook for euro-dollar could turn negative. So that could actually open the doors towards lower levels, or even the 200-day moving average at 110.50 territory. So let's move on to 1 hour chart. Lower moving averages, fast moving average, the 5 and 9 exponential moving average keep moving lower, a bit like softer right now, but still pointing to the downside. Oversold, but it needs a correction. Right now we are seeing a slight correction right now, but it is not a significant correction yet, until we see at least any bullish cross of the 5 and 9 exponential moving average, or a shift of the sentiment based on the momentum indicators. So the intraday momentum indicators, let me put my navigator on as well. So let me have my favorite MACD and RSI still here, so you can see that. Let me hide my camera for now. It's black. Okay. I'm not sure whether you can see it or not. No. Okay. No. Actually, that doesn't look good. Doesn't look good either. Not sure how can I change that. application, share. Okay, okay, that's much better. So you cannot really see where MACD is right now because unfortunately with this software I'm hiding with my face the MACD, so never mind. I will just say that it's negative. MACD keep extending its lines lower below signal line, below zero line, so that's a bearish signal. RSI is well below neutral zone. It's actually on 28, still bearish, still in the oversold territory. Turn slightly higher, as you can see over here, a small correction, but that's a temporary. It looks just a temporary correction. So we might see, because it's already overbought, it's oversold. Sorry, the asset is already oversold. We might see a bit of a correction before another shift further to the downside. So as 50 is right here, around here. Up. So you can see that it's in the oversold territory. Needs a small correction, but as long as the asset doesn't turn back to at least 1250, which is our 38.2 Fibonacci retracement from yesterday, from today's losses, or at least above this confluence of 200-hour moving average Fibonacci and fractal around 112.50, 112.60, then the overall outlook, the intraday outlook more precisely for euro-dollar, remains bearish. So okay, that was it. So the top of the hour closed bullishly, but as I said, it was over, so this might be just a correction. Let's wait and see. The overall sentiment though remains negative. So hopefully I replied to your question, Kemphy. Let me hide it. And let's go back to dollar yen. I had a lot of people asking for dollar yen. So dollar yen, here we are. So intraday, because of the dollar demand, as I said, you can understand that all the dollar crosses have moved accordingly. So dollar yen under a lot of pressure against dollar to the upside, breaking yesterday's highs. And if I put the daily picture on, you can see that actually it broke nearly 5 days area. So it broke that. So we have been like moving sideways the past 5 days, but failed to move to sustain a significant move up above 107 level. But it managed to do that today. So it actually turned back to six days highs and the 107.40 territory. So it spiked actually today up to 107.44 territory, slightly below today's high so far. Today is at 107.26, but actually that is quite interesting, because the asset has been like had entered a narrow range the past 2 weeks, and now is moving, is actually showing some signs of improvement. So let me go to the intraday chart to see what's going on. But it was a nice strong daily candle yesterday. So if the bullish movement continues, eventually we need to take care of some reversal sign. And what I mean by that, so it has been declined the whole June, actually since the beginning of June, so we had pretty much a down leg from 109.80 territory and down to 106 territory. So right now it has already posted a confirmed move above 23.6 Fibonacci level, and is actually retesting the 38.2. So a cross and a break and a closure today or tomorrow, it's Friday, above the 38.2 Fibonacci level could actually give some sign of a potential reversal of this down leg, sharp down leg from 109.80 level. So let's have a look on the intraday picture. Okay, so to the upside, However, it's giving some neutral picture. So you can see that the fast moving average 5 and 9 exponential have been flattened. Okay, MACD actually clashed with its signal line against something that suggests consolidation for the next few hours. However, RSI is still positive, it's still above 50, a bit choppy, a bit sideways, again something that suggests consolidation. Stochastic turned lower, bearish cross, remains above neutral zone, so that might be just a reflection of the correction that is needed for the dollar yen. But actually, let me quickly check whether something else is happening. But yeah, sideways for now. But overall, dollar on beat, yen under pressure. MACD very strong. We haven't really seen the histogram like turning lower or detecting below signal line. So for now, dollar yen is actually giving some kind of a consolidation ranking market actually. So let me put my favorite Fibonacci on. Still above 5 exponential moving average, above 9, above 20, well above 200-hour moving average, above 23.6 Fibonacci level. So nothing really pointing that we will see a reversal for dollar yen. Okay, so this decline from 107.50 territory, 48 territory or something over here, it's just maybe a correction, I wish. So and anyway, the US data came actually better than expected. So that's something that it might continue helping dollar. So we might, what we are seeing right now, it might be something like a taking profit behavior from the majority of market participants. Okay, there is something interesting. Mr. Gatlow actually stated that where was it? Okay, that he still see a strong V-shaped recovery. Okay, so that's interesting. Let's wait and see. So dollar, yeah. So that was for dollar yen. Let's go to gold. There were lots of you that actually asked for gold. King Sam, Mustafa, Pankole. Okay, I know that gold is actually the hot topic of the month. Actually, okay, a lot of you. Okay, interesting. Cat Swiss, someone asked. Okay, let me go to gold. I will return with Cat Swiss and pound from Kitsley and Miss Wealth. No, it's not a webinar, my dear Omid. I'm glad that you have attended. But it's actually a YouTube live, Facebook live at the same time, with some difficulties, these technical difficulties, but we try our best. So let's move to gold. Let's move to gold quickly. Gold. Oops. It should be somewhere here. Okay, so either I have passed it or I cannot really see it. Here is silver. Let me quickly put gold on. So gold, here it is. Okay, so I will start with daily chart. Okay, and that's simply because we have seen gold spiking and actually spiking yesterday on the closure. Actually to 17 or plus 17. Whoop, come on, 1779. So just a breath below 1780 territory. So Gold overall has come in a very, very good session this year. So despite the risk on and off conditions, the crisis, the pandemic crisis, we've seen that gold is one of the assets that actually sustains some significant long-term gains, because this area that we have seen the past 2 months to April, May, June, nearly 3 months time, this territory, this one that I'm showing right now over here, is actually taking us back to 12 years territory. So for 3 months it was like wobbling between, like, trading between this 1665 and 1760 territory, but yesterday, actually this week, managed to break that level, to move further to the upside, breaking the 1760, and more precisely posting a high up to 1779 level. So we've seen that gold keep pushing to the upside, and actually, where was it? I need to see your questions as well. I need to, okay. Where are you? Here we are. Okay. So gold is actually, as I said, the hot topic, because we are seeing that it's strengthening. Further momentum indicators have flipped further to the upside. You can see daily MACD over here, but you can't. I'm in front of it. I don't know how to change that. Let me put MACD at the very top so you can see what I am seeing right now. Okay. Oh, slightly better. So you can see that we had a nice rally in since mid of March, spiking higher. Sentiment was sustained, positive sentiment was sustained, lifted to zero, neutral like in June, early in June, but now it started actually increasing again. So I'm sure that you can see that's a strengthening of MACD lines above signal line, something that is considered to be theoretically at least a bullish signal for gold. RSI at the meantime is actually posting higher lows, okay, higher lows and higher highs above 50. Again, something that strengthens the sentiment to the bull side. So bulls are taking over the control of gold, and actually the overall picture looks positive, because other than indicators and technical tools, we can see that keeps extending above 50 and 200 moving average. Bollingers are like widen, they're getting wider but to the upside, so extending further to the upside with a bit not sharply, but with some they widen slowly, but still it sustains a move above 1700, above these double fractals over here that we can see at 1748. Let me put that in a different color so you can see it as well. Okay, 1748, that was a key level to be watched, a key resistance level. If you were watching our analysis, I had a gold outlook posted like on Monday, so that was on Monday or last week. No, it was on Monday. So double fractal, double top, 1748, a key resistance level which actually broken. Okay, it has been broken on Monday, since the asset move and open actually and close above that level. So this is as we said more than a month ago, any move above 1750 would actually open the doors to 1800s or even higher. So I know that I'm stuck with the daily chart, but I really like to show you the weekly chart, so you can see that we are pretty much back to this territory, back to 8 years territory. So the fact that any move, if it sustains a move actually above that level, then really that opens the doors to territories that we haven't seen since 2011, 2012. Okay, so so yeah, that actually turns our attention in the long term into a bullish gold outlook. Actually, something that I didn't mention, you should have in mind the fundamentals as well. So as I said in my outlook for gold, inflation affects gold. So more precisely, I would like to share that with you. Let me find it, and I will try to where is it, to share it with you. Okay. Before we go to the intraday stuff, I want to share with you this paragraph. I want you to have this in mind. So I want you actually to have this in mind, this paragraph. So just to have to have it on the back of your mind in the long term, the medium term. So what actually is affecting and could affect in the near future, in the next few weeks, next few months, gold will be, of course, yields, stimulus, inflation. So since we've seen central banks, global central banks, providing massive stimulus, okay, this has an impact to reduce bond yields, okay? So bond yields are very correlated with gold because gold is a non-yielding asset. So as yields moving lower, okay, gold is appreciated, is moving higher. On the other hand, also the fact that the stimulus is like we had massive stimulus, no deduction on the interest rates is something that also raised the risk of inflation, and this as a consequence devaluates other assets and currencies as well. So this devaluates euro if it's gold against euro, devaluates dollar if it's gold against dollar. So that's why gold looks to be a very attractive asset in comparison to yields or any kind of currency assets. So you need to have in mind that, and that's why we've seen several banks, actually several private banks recommending their investors, they are actually billionaires and millionaires, this kind of investors, actually to consider in their portfolios, their long-term portfolios, gold. This is very, very in contrast with what we have seen like pre-pandemic. Pre-pandemic, we have seen these kinds of private banks suggesting that, actually recommending their clients to avoid investing in gold. So this scenario has changed. So let's get back to our MT4 and let's see the intraday picture of the gold. Okay, 1 hour chart. Let me put the 5 and 9, is it here? 5 and 9 exponential moving average. Here we are, 5 and 9, 5 with blue, 9 with yellow. Yes, it was initially off yesterday's highs, turned lower to 1756, but managed to sustain a ground over here, a floor over here, away from 1754. Remember, the key level to be watched was 1748, which was initially resistance. Now it has been converted into a support, okay? But nonetheless, it managed to sustain a ground over here above 1754, rebounded the last hour, continues to the upside, crossing 5, crossing 9, crossing 20 period moving average in the 1 hour chart. And actually, if I zoom in a bit, you can see that we have some kind of bullish cross of 5, 9, and 20. However, it hasn't really confirmed yet. We need to wait at the top of the hour to confirm that indeed we have a bullish crossing between 5 and 9 exponential moving average in the 1 hour chart in order to suggest that it will continue moving higher as we're going through into the US session. So right now we need to add in our watch list. We might have a bullish crossover here. It has already posted gains up to 31.2% from overnight losses. So something that also strengthens the bullish intraday sentiment for the asset. So let's wait and see at the top of the hour. Let me flip to the 30 minutes chart. Massive 30 minutes candle. Okay, so according to RSI has crossed higher. ATR suggesting another suggesting 4.17 pips performance. So in the 30 minutes session, let's wait and see. But overall picture, daily picture remains positive. Intraday pictures is still negative to neutral, but trying to improve. So we might see a reversal back to yesterday's highs if we get actually this bullish cross to be confirmed and actually extend up to 1767, which is our 50% Fibonacci level retracement from overnight losses. That was on gold. Cat Swiss from Pancole. Let me find it. Cat Swiss. One of the very volatile asset actually. Cat Swiss. It might be somewhere here. If not, I will just drag and drop it. Okay, not here. I can't find it. At least let me open it manually. Cat Swiss. Where is it? In a decline since yesterday afternoon. A nice rounding. Okay, this is a daily chart, by the way. Daily chart decline so far this month since the beginning of June. Found a bottom over here at 0.69 territory. Tried to move further to the upside, didn't manage to remain below the 20-day moving average, and is actually posting some kind of a rounding top. Remember that a rounding top technically is a bearish pattern, but it hasn't really confirmed yet because we have some kind of a rounding top, but it needs to break the 0.69 level in order to be confirmed. So this is just something that you should have in mind in the daily picture, in the long-term picture. So a break of this neckline, and move below 0.69 will open pretty much the floor, the doors down to March lows, the 68, 60, or even 66 territory. But let's see the intraday picture. I know that this is what you want to emphasize on, that you're intraday traders, I assume. So let me put my regression channel on because I can spot some kind of a channel over here. So let me put that on. And actually, you cannot see it if it's in blue, right? Okay, so it's some kind of a channel seen since 23rd. So since Tuesday, decline, downwards channel, rebounded from. Actually, the immediate support could be, sorry, I need a vertical. Okay, so support could be really found at that territory. Yeah, so we have seen that retesting the upper line of the channel, turning lower, then rebounding from the lows, testing again, lower, rebounding, testing again. Actually, the last 3 hours ago, prior US Open, we've seen that it retested once again the upper line of the down channel, but it quickly turned lower again. So pretty much you can see from this downwards channel that is we have a bearish intraday market for Cat Swiss. Swiss is a safe haven, right? Don't forget that. So we've seen a demand for Swiss, while on the flip side, Canadian dollar is really driven by oil. So the last 3 days we've seen oil declining, not significantly, but declining. That's something that weighs on the Canadian dollar. Okay, so that could be really well explained from Swiss safe haven condition, actually characteristic, and the decline on oil the last 3 days. Right now, let me put my Canadian and my MACD on stochastics as well. Okay, so as clearly MACD continues like still negatively configured, but we have some kind of an ease of the negative sentiment in the intraday picture, similar with what we have seen over here. So you see, it didn't last really. It was just a correction before another turn to the downside. I should detect a bit the MACD settings for 1 hour chart. So I could actually 3, 5. Okay. Oops. I did something wrong. I did something wrong. Okay, let me just. Okay, so. Okay, this might be more sensitive MACD setting. So let me check whether it satisfies my asset. Down, 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 return up, turn higher. Okay, it satisfied it intraday at least. Turn lower, 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 higher, turn higher, lower. So right now we see that it turned positive, and there's still some positive momentum according to MACD. That is very, very sensitive intraday MACD settings. Okay, remember, if I detect too much the settings, it might give me some kind of a faster signals, but they are not always accurate. But nonetheless, it's still positive, extending above signal line. So we might see the assets sustaining move to the upside in the near for the next few hours, because MACD is still positive. RSI, MFI, sorry, money flow index over here, that one is above 50. So that's something that suggests that we still have some kind of a bullish sentiment in the very, very short time frame. RSI is above 50 as well. So yeah, the majority of moving averages, along with the fact that it's trading above the midline of my down channel and above the 20-period moving average, suggests that we might see still the asset like remaining positive. But any turn, any reversal from the upper trend line of my channel, and more precisely below the 20-period moving average in this 1 hour chart, could actually open the doors for a retest of 0.6935. So this immediate support level that I have put with a pink color, or even the lower line of the downwards channel. That was on Cat Swiss. Hopefully I replied to your question. Gold, I have done gold, guys. Gold is your life insurance. We are married, however I closed my position at 1760. Okay, well done on it, well done. Be joining for another upturn as soon as it happened. Okay. I don't really know what you are referring to, Agus, I'm afraid. Cat Aussie, interesting. Okay, Cat Oz. Let's see, Pound Oz, sorry, Pound Oz. Pound Aussie, Pound Aussie. Pound Aussie. Okay, so pound. Someone asked for cable as well. Actually, I will start with cable. Where is cable? Before I go to pound Aussie. Don't forget, Brexit deadline is next week. Okay. Boris actually said that the trade negotiations will will end of July, but next week we're going to have a resume of Brexit talks with between EU, Brussels, and Mr. Boris. So that's something that weighs significantly on the pound, along with the fact that there is a market perception that Bank of England is actually having some kind of unwinding monetary policy premature. So this is something that weighs, that has been interpreted as negative for sterling. So we've seen actually sterling moving lower against the majority of the assets. Cable, more precisely. Someone asked for cable, I'm sure about it. I've seen a comment earlier today. Where is it? Pound cable. Okay, here it was. It was Miss Wealth and Kingsley. Okay, so let's start with cable. Cable daily picture down since the beginning of June, below 220 and 50 moving average, reversed to the downside on Tuesday, a strong bearish daily candle yesterday, and today is a bit in indecision, is flat, is like very, very close to the open price. So the overall outlook remains negative, though. We still has to remaining below 50, RSI remain below 50, MACD is also should be negative. It turned actually to neutral. So and if I put some Fibonacci on, you can see that it's actually retesting right now today, since yesterday, the 50% Fibonacci level. So a close today or tomorrow, so the end of the week, below 50, below the 112.40, should be 112.40. Let me double check. 112.30 level, which is the 15% Fibonacci level, could actually suggest further steam to the downside with a potential retest of 61, which stands at also at this double top bottom over here, the 23.40 level. That was in the medium term chart, daily picture. Let's have a look on the hourly chart though. So it's quite interesting that, okay, we had a significant decline since yesterday, but the interesting part is that it managed for like more than 20 hours. Let me double check. 22 hours to sustain a move above, sustain a floor actually above 24 level. 124 is a long number, a key support level. So this is where you should really emphasize on. That would be a key level to be watched, a key support level, which if it's broken, if it breaks, it will open the doors to 123.50, 123.40. So it's actually what I stated earlier in the daily chart. Now, for those that are interested in the very short time frame, you can see that 5 and 9 have been bearish, crossed over here. The last an hour ago, we have a bearish cross for those two assets. MACD remains negative, even though it has been slightly improved earlier today, but it remains negative. Stochastic turned negative to the over to just ready to actually cross the oversold territory. RSI is below 50, so intraday picture short time frame remains negative for cable. There are a lot of things that actually weighed on pound. As I said, don't forget Bank of England. Don't forget about Brexit, that the talks are resuming next week. Don't forget about the possibility of a no deal in July is really, really high in expectations. Okay, and actually now we have seen a lot of reports that pound is like really turning to emerging market. So it has lost pretty much its how can I say that? Its condition as one of the major currencies of the world. It's actually turning some kind of emerging market. Nothing really confirmed, but this is what we can see from the behavior due to the pandemic. So it's like really driving with a risk on and risk off sentiment as well. So let me put the pivot points on just to make sure whether it, no, I can't. Okay. No, I can't. Okay, never mind. So let's move to the one that pound Oz. So it was to me Tammy's question. So sharp decline for ages, actually was since March. You can see that's daily chart, and we have seen that it was one of the pairs that have been this significantly declined. Was pound Oz. Oz was turning as a commodity asset. It had a very good second quarter so far this year, and it was actually commodity assets actually benefit a lot on this after March. So right now 118.36. That takes us back to September 2019, September 2019's territory. You can see that it's moving below 20-day moving average, below 200, and have a look on the 20-day moving average. So it keeps moving below it in the lower Bollinger Bands area. So it didn't, as long as it doesn't manage to move above 20-day moving average to get rid of that negative territory of Bollingers and to move to the positive one, the overall picture remains negative. It's just one way for pound Oz, at least in the daily chart. This is what the trend is showing us. It's a negative trend. It's a downwards trend in the daily chart. MACD very well below, very far away from zero. Negative indicate negatively for configured. RSI the same. A bit of a choppiness the last 5 days, sideways movement, but nothing really that suggests any kind of reversal for the time being. Intraday now, nice. That's actually very interesting. We have two very strong hourly sessions rejecting the 200 hourly moving average. That's very interesting. Rejecting the 200 moving average is something that has been rejected for the whole week. Reversing away from it, retracing away from it. This was a strong candle breaking down below the 20-period moving average, and actually an even stronger bearish candle the last 36 minutes, and breaking outside the lower Bollinger Band territory. So yeah, very interesting. Cross of 5 and 9, negative cross, bearish cross. And actually, if I just put the Fibonacci on my for the week's performance, you can really see that it crossed already, other than that cross outside Bollinger's, lower Bollinger territory, it actually crossed below the 38.2 Fibonacci level and broken already the lows that have been seen yesterday. So yeah, the outlook looks a bit negative. Looks that the bears are trying to gain the control of the asset. Very interesting. Thank you for pointing that out, dear to me. So next level to be watched, next support level for pound Aussie in the 1 hour chart will be really the 180.20 level, the 50% Fibonacci, or those two fractals over here at 180 level, around 180 level. Pound yen daily picture below 220-day moving average for the past 8 days in a row. Failed to post to reverse on Tuesday, reached 136, but it closed dodgily. You can see a very small body, long tails, suggesting indecision. And if we see indecision, that suggests that we might see a reversal anytime soon. Okay, so doji on Tuesday, lower on Wednesday, doji again today, very close to the open price. no significant incline. So a bit neutral for the time being, neutral to negative outlook in the long term. Let's have a look in the 1 hour chart. Reversal, actually retracement from 133 territory. Let me put that with yellow. Okay, so reversing for 1, 2, 3, 4, 5, 6, 7 consecutive fractals. So reversing from 133.60 territory, that suggests that we have a quite strong resistance level over there, just to have in mind. Reversed, and now we have 1, 2 consecutive negative candles in the 1 hour chart, and a third one that it needs another 22 minutes to be confirmed. So yeah, it's something that we should really turn our attention on as well, because we might see a bearish crossover here for 5 and 9 exponential moving average, or a potential break and a close at the top of the hour below the 20 period moving average. So interesting. RSI below 50, strengthening the bearish scenario. And MACD, let's have a look. Flat. Okay, so intraday looks to be a bit negative, but it might sustain this ranking market that we have seen since Monday. So it's like bouncing between 132.60, 133.60. So yeah, that's around the mid level. So yeah, we might see a reverse, a retest of 113.60 level, 32.60 level in the next few hours. Okay, I will end the session, guys. I will reply to the last question regarding euro dollar, even though I had covered euro dollar earlier. But I'm running out of steam. I'm quite tired, to be honest. So I will finish with euro dollar. I will just let me check Facebook whether there are any further questions over here. Any questions from euro dollar? Albert Kong is asking in Facebook. We have covered pound, we have covered cable. Perfect. So I have replied to every single question in Facebook. So I will finish with euro dollar since David asked for it. Not David, David. Sorry, David. So let's finish with euro dollar. Let's go back. As we said, sharp decline. The ECB liquidity proposal didn't really help. A lot of downwards pressure for euro dollar. You can see that it's in a continuous downwards channel below all the moving averages that I have over here. Didn't manage to reverse this bullish 1 hour candle. Seems to be, at least for now, just a correction of this oversold asset. If I just put again MACD, so you can see that it's strengthening below signal lines, so that suggests further steam to the downside. RSI is below 50, actually on the 30 territory, oversold territory, but there is further area to be covered to the downside. Stochastic pretty much the same, close to the oversold territory. So actually the overall intraday outlook for euro dollar remains negative, with next level to be watched at this bottom 111.90, just 17 pips lower, or even lower at this latest 3 fractals, this support area seen last week around 111.70 territory. So yeah, that was the ground that we have seen last week. So in case if the 111.90 breaks, then the next support to be watched will be the 111.70 territory. So that was it. Gold seems to be the hot topic. Pound looks to be the next hot topic of the week and of the day. So pound leads Eurolax, stocks actually are near flat levels. Let me just show you quickly. So DAX over here, sideways, flat. FTSE declined significantly overnight, but it's sideways the last 5 hours. What else? Where's my US futures? Okay, have that over here. Nice rally in the long term. Intraday though sideways. So equities are like flat, but any break of support level could open the doors further to the downside. Any break of resistance could open the doors to the upside, as this will mean that we are getting out of this ranking market. That's it. I'm not sure whether I missed something. Hopefully I managed to help you guys with what is going on today. I missed the opportunity to sell pound Kiwi for 100 pips. Don't worry about it, Amit. There are a lot of actually, you can scan again your MT4 and you might identify something else, right? So I will end the session, guys. I will just say that for the right now we have 3 speeches, ECB speech, ECB speeches and Fed speeches. So we have ECB Snapbell, Kaplan from Feds, and ECB Merch speaking. So any comment regards if they provide any kind of hints regarding the next steps from Fed and for ECB will actually help us to some kind of to have a long-term picture of what the major central banks will do from for their next meetings, for the upcoming for the remaining of the year. We have also Fed Bostic as well, Bank of England Haldan speaking like in 3 hours time, and we're gonna see a bank stress test actually from US later, like at around midnight, and you can understand that if we're referring to a stress test, this is something that it could affect the stance of monetary policy for Fed. So the result will actually affect the future action for Fed in regards to the economic growth of the United States, whether there is a sustainable economic growth, whether there is and whether actually and to assess the risks of its long-term goals, of Fed's long-term goals in regards to the price stability. So it will be interesting. That's it. Thank you very much for attending. I have covered gold. Gabriel, at the end of the session, you will be able to go back and see what I said for gold. It will be the recording will be there in Facebook, YouTube, so you can actually go back and check it. I think I covered EuroCAD as well. But if not, just I will briefly say that we had a sell-off pressure so far today, a bit of a reversal, but it needs to at least reverse back to 50% of the losses, to return at least 50% of the losses that we have seen since yesterday, not to the bearish outlook to turn into a positive in the 1 hour chart. Thank you guys for attending. Hope you're having a great day ahead. And I might see you again tomorrow because I'm planning to do another live analysis tomorrow. Thank you very much. Take care and see you again tomorrow. Bye-bye.